The thing that's so interesting about this last quarter is they hired so many people, and yet they still were able to post operating growth.
Mark Zuckerberg got up onto an earnings call and said, look, we're facing this incredible threat called TikTok.
While social media sites dominate a large portion of internet usage in 2023, that wasn't always the case. In the early 2000s, social media was a small niche known only to internet enthusiasts. But that changed within a few short years with the launch of MySpace, a social networking service. The site launched on April 1, 2003, and was the first social network to reach a global audience. By 2006, it was the most visited website on the planet. While MySpace's popularity was short-lived, being eclipsed by competitors by 2008, it made social media relevant and at the forefront of pop culture. The competitor that had surpassed MySpace was Facebook, a site started by a Harvard sophomore named Mark Zuckerberg in 2004. Zuckerberg initially built the site to connect Harvard students with one another. Only a day after it launched, more than 1,000 people registered. The site quickly became one of history's most significant social media companies. Facebook is now one of the world's most valuable companies, with over 2 billion monthly active users. Facebook enjoyed success for most of the late 2000s and early to mid-2010s, but it has significantly declined within the last couple of years. While its stocks experienced multiple new all-time highs in 2021, they declined by 48% in that same year. Most of the decline is expected to be tied to the company's big move into metaverse technology, with Facebook's parent company being changed to Meta Platforms in October 2021 to reflect this. The move was done to dive into the emerging world of Web3, which is the integration of blockchain technology into the internet. Think Bitcoin, Ethereum, and NFTs. Zuckerberg has been vocal about his and Meta's commitment to spending billions developing the metaverse. While he is committed to this innovative technology, Meta's Reality Labs unit, the sector of the company responsible for developing the virtual reality and augmented reality technology that are used to interact and join the metaverse, lost more than $9.4 billion in 2022. The company is putting billions of revenue into these projects with hopes of becoming a leader in the metaverse by investing in technologies like virtual reality and augmented reality. They're also working to create a fair and safe ecosystem where many can flourish, including users, developers, stakeholders, and partners. While the move into the metaverse may seem like only a catalyst to Facebook's decline, it's more nuanced than that, with multiple factors coming into play. One of the more obvious reasons is the growth of competition. When Facebook emerged in 2003, there wasn't a lot of competition that could provide a comparable service. Today, however, many companies are fighting for users' attention. The biggest competitor to Facebook is TikTok. TikTok has over 1 billion active users. While Facebook does have around 2.9 billion users monthly, TikTok is poised to overtake it within a few years. Though Facebook does have more monthly active users, it took almost 20 years to get there. TikTok has already reached a third of Facebook's monthly users in only 7 years. Its growth has come to an unprecedented rate, doubling its worldwide user base from 291.4 million to 655.9 million in just 2 years, between 2019 and 2021. Facebook grew from roughly 1,750 million to 2,606 million active users in that time, a 4% average increase, while TikTok had a staggering average 18.2% increase. With these numbers in mind, TikTok will have 3,332 million active users in 2026, while Facebook will have 3,048 million. Another notable reason behind the decline comes from a significant slowdown in ad sales, which is affecting all platforms, including Twitter, YouTube, and of course, Facebook. The reason behind the slowdown is caused chiefly by rising interest rates, inflation caused by the residual effects of the pandemic, an issue that isn't settling anytime soon, and slowing global growth. This accumulation of issues has caused many companies to reduce their marketing budgets. Reports show that the overall advertising market will continue to slow in 2023. With ad spending budgets being slashed on a year-over-year basis, there have been 50 to 80% sell-offs across the advertising industry. In 2019, Facebook generated $69.7 billion from advertising, more than 98% of its total revenue for the year. With that in mind, it is safe to say that a slowing in ad sales has had a massive impact on the company. Another shakeup regarding Facebook advertising came when Apple changed how iOS, the mobile operating system powering iPhones, handled users' privacy preferences in 2021. The change introduced a new privacy feature called App Tracking Transparency, ATT. which makes it harder for advertisers to track user behavior. With iOS having a 57.75% market share in the US, a difference of 15.87% shares to Android's 41.88% shares, this has drastically affected the platform. Facebook can still track apps it owns without asking users, but it can no longer track user information across external apps without the user's consent. This information determines a user's demographic to help advertisers extend their reach. The new iOS change has cut even deeper into Facebook's already reduced ad revenue. With all of these issues in mind, it's clear why Facebook has been having some bad years. However, the company is more concerned about the future. Anyone who's a part of the Web3 and metaverse space knows that the space is on its way to exploding and becoming a prominent part of everyday life. The global metaverse market was at $65.5 billion and is expected to jump to an astronomical $936.6 billion by 2030. Even with these impressive numbers, some believe that Meta's push towards the metaverse is incredibly risky, as there is no guarantee that it is not a fad. While the metaverse industry looks promising, with big names like JP Morgan even speculating that it could be worth $1 trillion in yearly revenue, it could take years or even decades for Meta to hit the trillion-dollar mark. This is clearly shown by the numbers hit by Reality Labs, the company's metaverse sector, which reported $877 million in revenue in the fourth quarter of 2021, only 2.6% of its company-wide revenue. Despite this poor performance, the company has continued to fight to bring the metaverse to the masses, with 2021's operating loss hitting $3.3 billion, up by more than 50% from $2.1 billion in 2020. However, things seem to be already turning around, with Meta's stock price jumping 2% in the pre-market trading in March at the start of 2023, putting the company up 47.92% year-to-date after a fall of 64.45% in 2022. Moving into the first quarter of 2023, shares jumped again to 76.1%. While the social media stock is still 44.5% below its last high in September of 2021, it is starting to escape the downward trend it's been on for the past several quarters. The company delivered even more favorable news, stating that user engagement grew 4% on Facebook and 5% in its family of apps, which include WhatsApp, Instagram, and Messenger. Zuckerberg made a statement as part of the release of Meta's positive fourth quarter earnings report. Quote, "Our management theme for 2023 is the year of efficiency, and we're focused on becoming a stronger and more nimble organization," end quote, temporarily quelling investors' poor view of the company's multi-billion-dollar investment into the metaverse. Though the past few years have been incredibly volatile for Meta and its investors, this efficiency drive could be the key needed to bring the company back to its core revenue drivers and get it back in the good graces of investors. It would make sense why those on the outside looking in, like investors, are somewhat disappointed with where Meta is and the trajectory of the company. However, it isn't as bad as most initially think. While stocks are down, the company is the dominant social media company globally, with 2.8 billion daily active users across its numerous apps. They still own Instagram, which currently has over 2.35 billion monthly active users and is estimated to reach over 2.5 billion by the end of 2023. These numbers make Instagram the fourth most popular social media in the world in terms of monthly active users. Even if growth slows, the company made $57 billion in operating income in 2021, so it wouldn't have had too bad of an impact. Though the move into the metaverse could be looked at as a mistake and a bet that could cost billions, Meta is one of the most wealthy companies in the world and also has all the necessary resources to source the talent and technology needed to make it work. The estimated growth of the global metaverse and the influence of Facebook could make Meta a massive success, bringing innovative technology to a large portion of the entire global populace. It is too early to dictate whether Meta's strategic pivot toward the metaverse industry pays off or is a failure. With the management team led by Meta's founder, with a track record of vision and execution that led to the company's current dominance in the social media industry, this could be the right decision. So the bet may seem like a poor decision, but it could end up paying off in the long run. Hope you enjoyed this video. If you want to be notified when we release more videos on the world of tech, subscribe and hit the notification button. Thanks for watching. Until next time.